Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to share with you an ATFX Connect, the summary of the week. I'm gonna give you a quick review on all assets, equity, forex, commodity, even Bitcoin. We're gonna take a look also if we got time and if you want to, you have interest, we can even gonna take a look on the bonds, on fixed income. Let's set the screen and mention what was important this week. We got the calendar over here. We can take a look what was the main results, which I can tell you already in advance. We got the PMA from Europe, PMA from United States. That was good. You probably want to hear about something else and not about the macroeconomic data because it wasn't so relevant. Certain comments from Central Bank of Europe, certain comments from Federal Reserve. What is the perception of these guys now after the inflation rate rising in United States last week? Well, we got certain comments from and also polls from Central Bank of Europe that are going in the same direction from the Federal Reserve. And I will say this is the order of things. The PMI data released this week moved the market. I don't think so. We also got in a different highest level the comments from Federal Reserve and Central Bank of Europe. These ones definitely moved the market, but did they move the market? It was negative comments. I can tell you we're gonna see in a few seconds in detail what exactly they say. It was negative comments, but still the market was rising and breaking up new maximums once again. Another positive week, right? Celebrating something. Especially in the case of Europe, because Europe is giving the worst economic results in years, and still the equity market is still rising. Where is the investment and money coming from? I personally don't know. I don't know who is investing in German stocks when you can see that Germany economy is dropping and contracting by minus 0.3% the last quarter of 2023. Amazing. But the top event of the week, we go to the point, is NVIDIA results. Do you remember I published and I shared on my social networks a special report on NVIDIA where we were mentioned fundamentals, we were mentioned the low leverage, the so clean numbers they got in terms of, well, the balance sheet mainly. It was almost double of assets in short term than the liabilities, and in long term it was like a third part, 50% of that. So super good numbers. Low liabilities, high levels of value on assets, low ratio of leverage, even comparing with companies like AMD. I was reading recently in Seeking Alpha that the risk of bankruptcy in the case of NVIDIA is around 1%, 1.8%, while the risk in AMD was exceeding 15%, almost 20%. So obviously the main competitor of NVIDIA is in a worse position than the company. The company seems to be super clean with low debts, low leverage, and good numbers. And obviously the result was so good. Massive, well, not massive. It was a positive gap on the results. Dividends, EPS published, it was better than expected. Well, it's time to start to show some numbers, right? So let's take a look to the numbers. You can see here, it was 71 cents above the expectations, which it was $5.16 per share. So it was actually good. And 22 billion published. The report I was giving to you was actually giving for NVIDIA kind of support levels in $600. I was actually on TV interview when they published the results from Europe, from my side. So it was night, it was late. Still, instead of being eating and watching something on the sofa, I was in front of the cameras talking on TV and sharing with you my personal comments and view on the results of the company. It was amazing. It was a party, a massive party on the market. We can see today the first red numbers here, but obviously it's understandable after the movement of the price recently. I remember when the time we published the report on NVIDIA, I was sharing with you this downtrend on the company, And I was telling to you, well, the company for sure is strong. If we trust on the fundamentals published by the company, it means like the price is, the company is solid and is strong. And therefore, that's why I believe that if we see by any chance bad results, with more reason, we could even consider add NVIDIA to our portfolio. And remember, this is not advice of any kind. I'm just sharing with you my personal view on the market. So in my expectation, I was thinking, you know what, $600 per share will be an amazing price to entry on this market. But even below that one, 500 will be amazing. The thing is, it didn't give you even the chance to go there. It was just rising massively. And this caused, take a look now to the rest of the markets, a super positive, strong boost effect on the rest of the markets. You can see right now SP 500 recovering, the prices dropping until Wednesday. So it was recovering quickly the market. We also know that the last week, one of the main things we got, one of the main problems, it was the inflation from Federal Reserve was higher than expected. Remember, next week, 28th of February, I believe, we're going to see the PCE inflation rates published from the Federal Reserve, which is another data that it's going to confirm or actually rectify the numbers by the standard inflation that the core inflation we received last week. Now, saying that, we got the NVIDIA effect. Take a look. This is interesting. Not even in US market, even in Japanese market has been causing a kind of boost effect on the price. You can see that Nikkei also break up new top records lost by 1987. Since that crash, Nikkei was not recovering back again those levels, and now they did it. They break out those levels and they are in a new top record. So from United States to Japan, the sector is pulling all the markets up, not only technological sector, also industry, also energy. If you take a look to sectors, you will see that all of them are performing super well the last month. And as you can see, energy up 7.53%. In the case of XLE, which is a ETF composed by like 15-20 oil gas companies in the United States. Industry rising also well. Financial services rising is about 5% returns on so far this month. Healthcare. So it's not just technologies. Everything is rising with this NVIDIA effect. That's why I believe that we are acting hyper optimistically, and therefore we should be more cautious and take a look to another important topics. I don't want to miss the party. I don't want to just pull you down, but we also need to consider the comments from central bankers that it seems to be a kind of comment that someone is just selling in the middle of a party and no one is listening because the people are just busy dancing and celebrating. Now, let's take a look. First of all, the surveys published by Reuters from European Central Bank revealed that customers in the Eurozone increased their expectations for inflation in the coming year and remain stable for the next 3 years. This is very interesting because if you take a look now, they expecting to, while ECB estimate for the next 3 years, staying constant 2.5% inflation, the median expectation for inflation over the next following 12 months increased to 3.3% from 3.2% estimate in December. So again, they are increasing the estimation of inflation. You know what that means? That means that central bankers are not gonna cut interest rates. Not at least immediately, not at least right now, nor at least the market start to break up. Okay? So that's why I believe this is a very important point. Today, Holzman from Central Bank of Europe, this morning early in London, he was during the speech they were giving, he said, I don't see circumstances for the ECB to cut interest rates before the Federal Reserve. So right now you got certain clues about what's going to happen. First of all, you know that Federal Reserve based on certain numbers, and again, look, because Federal Reserve seems to be in no hurry, Goldman Sachs analysts now project for 25 basic points reduction in interest rates this year rather than the one they had anticipated in May. So Goldman Sachs and many others. And this guy who is talking right now, myself, even on ATFX Connect, this Market Snacks report, I have been mentioned for many weeks already, since December, that we are assuming that interest rate cuts will come on March. It didn't come on March. After December, we have seen in January the expectation was, well, maybe not in March, maybe in May. Now, even some members of Federal Reserve are talking about July. And now Goldman Sachs is telling to you, well, we think that maybe the interest rate cuts that we were expecting are not going to happen in the way we were expecting. So because of all of these reasons, I believe the expectations going to twist the market or could make the market weaker. Otherwise, what we are facing is a magic trick. Yesterday, for example, labor numbers from from US market was actually so good. What it is? Thursday here. We got initial jobless claims 201,000 versus the expectations of 217,000. Super positive. Again, labor market is getting stronger and stronger, and these good numbers are actually the numbers that scare Wall Street and equity markets. Why? Because if the numbers are good, Federal Reserve cannot justify the the interest rate cuts. Why you cutting interest rates if the economy is responding really well, if the economy is strong, if the numbers are going well? Unemployment rate is low. We also got a growth rate that is working well. Why you will actually cut interest rates? In any case, maybe what you will do is increase interest rates with those numbers, but never ever cut interest rates if the main variables from macroeconomic perspective I'm telling to you, everything is going well. Why you need to cut interest rate? There is no need for that. Why are you doing that? Because there is no need for that, their concerns, I'm just a simple guy who is sharing with you my view on the market. But they are the experts from central bankers are saying exactly the same comments that I was telling to you a month ago. Like, we are not completely sure. There is no need for hurry. There is no hurry for cut interest rates. Waller was telling to you, I don't understand why, if we still are not at 2% of inflation rate, if we still got unemployment rate below 4%, which is super good, why we do need cut interest rates immediately. There is no need for that, right? And that comment, which it was like 3-4 weeks ago on Wednesday, it was dropping the market down. My friends, I'm telling to you, these things are still there. Those forces are still out there, and any of those comments could twist the market back again. So don't say I didn't told you. Don't say you were not warned about this situation, because this is my view, my opinion. Plus, also, I will say there is no fundamentals to keep this market rising. I mean, take a look. What you got in the screen is DAX 40, is the German index, equity index, the reference one, and you can see it's rising and rising and rising and rising and rising. But if you go and take a look on the macroeconomical fundamental numbers from German economy, is dropping and dropping and dropping. So who is supporting the equity in Germany if the expectation is an economy that is in contraction and contraction and contraction? You know the problems from the German government with justice in terms of the adjustment of the budget. For the first time, I will say, in the recent history, German government has been schooled by the court to do not break the rules of the budget. Incredible. So that's one of the things. Second thing I was mentioning to you earlier, and I still believe is active and it's happening, is a dollar rising. Because if the expectations of interest rate cuts are gone or are moving forward and farther than expected, it means the dollar gonna naturally trend to get more expensive, more high, the DXY index. Why? Because if the interest rate cuts are not coming immediately, then probably, meanwhile, many investors worldwide are going to decide to, you know what, then I'm going to put my money in American bonds. I'm going to buy dollars to hold in dollars until any interest rate cuts happens. In that case, the value of the dollar is increasing against other currencies. And it's very simple. If you also take a look to the numbers, China, and publish to you every single day updates on this, but China is announcement one day and another two new measures to stimulate the market, to stimulate the economy. Xi Jinping analyzing or requesting a report on financial market situation. We also got Governor Pan Gongsheng entered an office last summer. People Bank of China has made a number of surprising announcements this week. It announced that record reduction to the key lending rate. Money, money, and money. Where we got the money? Let me show you the money. Money, money, and money. Central Bank of China, Popular Bank of China, is putting as much money as needed on the table to keep the market rolling. And still, if I go to the Chinese index, you will see that things doesn't look super strong, super well. They need to recover all these levels lost. They need to recover a lot of the areas that they have been losing for the last. This is Hang Seng. You also got Shanghai Composite, which is reacting better or stronger or faster than the Hang Seng index. But if you take a look to long terms, you can see that actually, boom, it's getting complicated for Chinese equity market to move forward. But still, China is trying to put all measures there just to facilitate credit, flexibility, and all to real estate sector particularly, but for the rest too, to stimulate the economy and move the economy forward. That was all. We also got the gold. If the dollar is gonna get stronger, the gold probably could drop below $20 per ounce, and therefore the next range is from 2030 to 1850 or 1650 to these levels over here. So again, in that context, in that perspective. Now, oil also, very interesting to mention. The oil has been rising for the last week, but this week actually has been flat dropping. Let's go to a 4-hour candle so you can actually see the movement of the price. But potato, it's not moving to nowhere. It's just making a kind of lateral movement. As you can see, 84, 83, 50, 84 is working as a kind of resistance. I shared with you this chart a couple of weeks ago. It's working really well. You also got in advance the next one, which is 85. If we see that by any chance the price is breaking up, 83.50, 85 probably is gonna be the next stop. 85, 86 gonna be the next stop. And if it's dropping, again, we can expect $78 per share, per barrel as a target. That's in the case of oil. Bitcoin also. You got here the Bitcoin is just taking a pause. The market has been moving so well. The reaction of the asset has been so well for the last year. 2023 has been an amazing year for Bitcoin, and it seems to be that 2024 is going in the same direction. So positive feelings on Bitcoin. We also mentioned gold. We also mentioned dollar index, and we then mentioned euro dollar. But as you can see here, first euro dollar need to manage the resistance it's dealing with here. And again, if we see the dollar index moving to 108 points, 170, 50, all these areas, definitely gonna push back, gonna push down the pair euro dollar and probably move to the 105, 104.50 points. The dollar index, the euro dollar 105, 105. Yeah, 105 is the main goal. You see, is the main support and target level. So keep an eye on that, and super interesting. Let's see how it's moving and let's see how it's going. I think that's all. We mentioned already equity, we mentioned already commodity, we also mentioned Bitcoin and Forex. If you got any request in particular, please leave in the comments. And once again, and the most importantly, if you like this content, you really appreciate this content and this time spending here sharing with you information, please pay me back with a thumb. It's completely free. You can just click there, subscribe, and even share this video with friends or family or trader partners that are actually interested in this market. See you in the coming videos, and take care. Good luck with the market. Bye bye.